Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. As we begin to look at the week that was, we can see that all three major indexes, the Dow Jones, the Nasdaq, and the S&P 500 all rose for the week. And the month of January certainly was a good kickoff for 2012 for the market. But more importantly, we can see that once again, off of good economic data at the end of the week, and we'll talk about that in a moment, but we can see that the Nasdaq has now reached its best level in over a decade. The S&P and the Dow Jones are now only at multi-month highs by advancing 2% this week. And the S&P now has had 5 consecutive weekly gains. We didn't have a lot going on across the seas. However, Fed Chairman Bernanke did indicate that there are concerns about what's going on with Europe, and even as Greece continues to deal with its debt problems, there is concerns of whether or not that's going to be a global problem, or are we actually contained from that problem? A lot of debate on which side of that. A lot of people say we're contained. A lot of people say it's going to affect the whole world. So we'll have to wait and see. On the corporate side, Amazon didn't meet their expectations, but the big thing was Facebook went ahead and finally made their filings for an initial IPO, initial public offering. I think they're saying they're trying to get $100 billion, which is going to dwarf what Google did for their IPO. So there's definitely a lot of enthusiasm and market buzz going on about the Facebook IPO, and all those workers who've been working for Facebook. There's about to be a bunch of millionaires, and maybe Justin Timberlake in the movie was right. And of course, the big news of the week was our employment situation. When the market was expecting 168,000 jobs, the market created 257,000 jobs. And they also increased the numbers for December and November, and unemployment ticked down to 8.3%. And of course, you're hearing the spin both ways about how many people have given up looking for work, and what's the real unemployment number. But again, for us as investors, and again, I focus there. I'm not here to talk about politics, and I'm not here to talk about the true economic numbers. I'm here as an investor, and I'm here to try to give you guys my insight as an investor. And as an investor, the market responded well to this. The market is at new highs, and we have to respond to what the market and keep our emotions out of it. I talk about this all the time. We'll talk about this at the end of the video. This is not about our emotions here. This is about our money. And this is about investing properly and making good decisions about our money. And the market has responded well to these numbers. So going into next week, don't really have that much going on as far as earnings. We do have Visa. We also don't have much going on the economic calendar. We have consumer sentiment on Friday. And so what this tells me is I may have to go over and take a look at what's going on our Forex economic calendar to see if, again, if Europe will take control, and if Europe's going to take control, that may pull the market back. It may, the euro-dollar relationship may change. So with this light amount of news coming out from earnings and economic data, I may look at the Forex calendar to see how that might impact the market. Let's go to the charts and take a look. Okay, so as usual, we are starting off with the S&P 500, but I did want to show you that I mentioned that the Nasdaq is at multi-year highs over a decade, but you can see that we're not there on the S&P 500 and the Dow Jones. Here we are back in May, 1370, And so we still have a little ways to go to at least match that. But we are beginning to, again, see multi-month highs where we're finally clearly have broken this swing high here from October. And now we're now testing the double top here from July and July and July. So that's where the market is. Just a beautiful uptrend, beautiful uptrend. We'll zoom in a little bit here now from where it started so we can get a better look at it. And you can really see just how nice this was. And of course, Friday, the market's reaction to the economic data of the week, the jobs report. Clearly, we're oversold here on the daily. I'm sorry, overbought. Overbought on MACD, overbought here on RSI. Stochastic swinging back up here. It's going to be interesting to see what happens. Sorry about that. We'll zoom out here to the weekly and get a really nice view of what happened this week. Again, zooming in to where the market is. There's that high back here again in May. Just beautiful. Look at that. 1, 2, 3, fractionally. 5 strong weeks higher. We're testing again this July, August move right in here. And the next topic is going to be this 1370 May high. On our weekly, there's still a little bit more room to go here on MACD and RSI, but stochastic is overbought. Now, to really get a good look at the month of January and what it has done, and you can see really going all the way back here to October 2008. This is the beginning of the collapse here. We still have a long ways to take that back. But we can get a real good view here of the month of January, the month of December. Here's our sideways November. Remember, November became sideways doji because of that last week of November heading into December. On our monthly, stochastics heading up, RSI heading up, MACD heading up. Still a little more room to go to the upside on the monthly. So we have pretty much overbought on the daily. Weekly and the monthly has a little bit more room to go. Now we'll zoom out and switch over to the Nasdaq. And here again, you can see this view here. Here we are getting above these double tops here from April and May, and then also here in July and August. We have zoomed right above that. And we'll get a better view of that when I get to the weekly charts. But we'll zoom in here and just see that little gap up there. And so, we are really, the Nasdaq, we remember for a while that the Nasdaq was lagging behind. And obviously right now the Nasdaq is starting to lead again. Our tech stocks are there. All of them are now overbought on our indicators. Our 3 musketeers, 3 amigos, all overbought. Let's zoom out to the weekly. I'm sorry. There we go. My little scroller bar wasn't being my friend. Okay, so here again we can get a real good view here of breaking out to new highs here. And getting above where we were. Now, what's interesting is, a lot of people say the buy is on the pullback. So if we get a pullback to this level, that might be interesting. But again, we can see just beautiful. As the Nasdaq was lagging, 1, 2, 3, 4, 5 weekly gains here on the Nasdaq also. It's really taking a lead. So CAC is getting to overbought now. RSI and MACD, there we go, still have a little bit more room to go. We'll go out one more time to the monthly, get another nice view here. Again, there we are breaking that swing high. Very nice December, very nice January. Here on the monthly, the indicators have a little more, just a little bit more room. A little bit more room here, a little bit more room here. So I expect to see well, here's the most important thing. Pause for a second, and that is we don't have a lot of catalysts this week. So when you think about the Nasdaq being tech heavy and we don't have really earnings, tech stocks earnings, We may fall into the financials and whether or not they lead, which is going to be based upon economic data. We don't have a lot of that. We don't have a lot, so we may see, again, as I said, some of the forex economic data to lead the banks. And unless maybe some more of the Facebook IPO, it's really going to be interesting to see if we don't get a pullback this week. Because clearly, 5 weeks up, the market needs to breathe just a bit. Let's take a look at our market leaders and see what they're showing us. So let's go ahead and start off with Apple, looking at a daily chart of Apple, and we'll zoom on in here. And we can really see there's the Apple blowout earnings right in here. And we have held that gap up here. And now we're kind of going sideways as we made a new high here on Friday with the good economic data. We can see a point of control here at 446. And that, really what that does is it kind of matches up with what happened here. We gapped up, kind of pulled back a little bit, pulled back here another day, hung out here a little bit. So that's why I've got a line here, even though I have it at 444. But the point is, this is that market reaction. And so I expect to see, some type of pullback to test this gap one more time. They say all gaps fill. Overall, Apple definitely bullish. Amazon, we mentioned in our opening that they had disappointing earnings. You can already see the downtrend that it was already in. And then if we zoom in a little bit closer, we can see the gap down. But it got to basically where it was before, and then it basically rallied from there. So I'll probably say sideways on Amazon. We'll switch over to Google. Google also had disappointing earnings a couple weeks ago after making a new high here. And we'll zoom in here a little bit, and we can see that it came down, tested the 200 moving average, and has made a nice move up. It's back in its range of 580 to 620. Our indicators have made that, cross where we've got the 20 crossing below the 50. And so we're kind of sandwiching here between the 200 and the 50. So we'll have to see here. So Google, I'm going to say sideways also. Goldman Sachs, the rebirth of Goldman Sachs. Obviously, long term, we're in a downtrend. But when we zoom in a little bit, and we can see that we're basically testing this swing high here from October. So let's go in here and draw that line for us. Zoom in a little bit more, and we get a better picture of that. Once we broke this downtrend line here, we really have taken off, haven't we? And now we're above the 200 moving average for the first time in who knows how long. It's tough because when you zoom out and see this downtrend we're in, when does this become an uptrend? Well, for me, I'll say uptrend when we close above this. Here's our swing high. Here's a dominant swing high. If we get above that and come back and test it, that's when I'll say an uptrend. Right now, I'm just going to say sideways because we can just say we're doing this right now. I'm going to say sideways. Sideways up, maybe. IBM doing very nicely here. The thing that's interesting is that, I had this channel in here, and we got a little bit out of it, tested it again here. So you might say that this 194 is our new resistance. And you really could say that here. We get a wicks tested here, wicks tested here, moving in between that. So this one, IBM, I would say sideways up. Intel's pretty much doing the same thing, making its way up here to 27. So I am going to go ahead on that one and draw that in here. And Intel, I would say sideways up. A lot of sideways up here, right? MasterCard had earnings this week. And MasterCard, we talked about this double bottom here in this support area. And then MasterCard again had earnings. And you can see the positive reaction to that. And it's making new highs. I am going to still go ahead and draw this in because if you look where this was and where the wick was, I'm still going to watch to see if the market comes back and tests that level right there. Netflix back in favor just a bit. But again, the issue here is wholeness. These people up here are definitely still looking to get whole. Anybody who thought we're going to get a bounce here, and so this is definitely a test of people looking to get whole. As we zoom in a little bit here and see that we haven't been able to break this. So it's a sideways up. But there's a lot of people who may try to get whole if we break up above this to try to go test the 500 or 200 move 100. And what that means is they're going to be selling because they're happy to finally have broken even, let alone the people up here at the $200 price level. Sideways up. And we'll finish off with Priceline. And, we've been talking about this forever. Priceline just channeling in between here. So here we are back at the top. 550, and again, I would be looking to get short once we got some confirmation. But this big channel that Priceline is doing right now, I'm just going to go ahead and say sideways. Now we're going to go ahead and take a look at some of our market sentiment leaders, and first we'll start off with our inverse relationship with the dollar. Strong dollar, weak market. Strong market, weak dollar. And we said January was a good month for the market, and January was not a good month here for the dollar. We can see this pullback here. But we're pausing here at this 79. So we'll see if we can get some catalysts. Maybe consumer sentiment on Friday might give us a little something. Not a lot of news. So again, we'll have to go to our Forex calendar to see what could really affect the dollar here. But overall, I'm going to go with sideways, maybe even sideways to down here for the dollar. So a weak dollar means what to gold? And gold has finally found its way, coming back up, of course, with the strong market. Gold fell off a little bit here on Friday. But it's trying to get back up here to 1700. But what we did say last week was, we said, look at these wicks right here. So it needs to get above 1750 to really say that we're heading up to 1800. And we did peek our head above there for a moment, for a slight moment. But Friday's actually brought us right back here. So, that's where we pause here also. So it's going to be interesting. I'm going to say sideways to up here for gold. And we know crude oil in its 102 to 96 range. It's doing that again. It's getting down here to 96. So there's definitely, you can see it got down here to 96. The buyers came in and brought us right back up. So that, those of us who want to trade that channel, that's fine. Gas over 350, really, really impressive. As we look at our education spotlight, we're going to bring it full circle. We mentioned this earlier. And again, the importance of developing a way to cope with your emotions is so overestimated in investing. And we were talking about earlier about the economic data, about the job data. And, some people want to politicize it. Some people want to emotionally react to it about the true status of the country. And that's all important. But when it comes to our money, we have to focus on making educated decisions about our money and about our portfolios, and not bring those emotional impacts, those emotional feelings, those emotional data to impact what we're doing. Those numbers can't be right. Well, maybe not, but that's not our job as an investor. Our job as an investor is to evaluate how the market is responding and work with the trend and not against the trend. So as on a day-to-day, it's not just these economic numbers, but on earnings numbers. And the old market saying of sell the news. Even good news can be a reason to short. Legitimate good news. So we have to take the time to come up with a system, backtest that system, and focus on the system that we are investing, and not as much. But we do have to be aware of the news. But our job is to decipher how the market is reacting to the news, and not decipher, as far as our investing concerned, whether or not we believe the news is correct and the market is correct in their interpretation of the news. Again, take the time, like, comment, subscribe, give us some feedback. Rage against nice talking with you. Keep posting. I'll respond to everything you put up there. Anybody to post, I'll be more happy to reply to what you have to say. So let me know. We're definitely finally got I got a new laptop to definitely do the editing for our You Make the Call channel. So and our first video is going to be on Apple and Facebook. So definitely want to check out those channels. And you know about our offerings, what we can do to help you make a trading plan, develop a trader's mindset, really make sure that you're making investment decisions, not emotional decisions. And for those of you who just say, I'm tired of trying to put this all together, and you're looking for someone to manage your account, we do have a great managed Forex account system now that you can find, michaelglass.com/forex.html. Full transparency, it's your account. You're giving us authorization to trade the account, and we'll develop a personalized trading plan for you. And again, for those who want to do it for themselves, through our coaching program, we can help you develop that trader's mindset also. Because in the end, it doesn't make a difference about all this external data if you can't pull the trigger and if you get analysis paralysis. Excuse me. So it really takes a time to develop that trader's mindset so that you can make educated decisions about your own financial future. Thanks, guys, and I'll see you next time.